Thanks for staying with us on today on STV. At this time, we'll be talking about Nigeria planning to adopt global financial standards, and it's called the International Financial Reporting Standards, and it's aimed at positioning Nigeria with high principles in accounting to meet up with what is obtainable in the global community. Welcome with Vicky and I at this time, our guest, to talk about this topic and what benefits it would offer Nigeria, Mr. Dayo Babatunde, who is the senior partner Ernst Young and also the head of financial service Ernst Young West Africa.
Thank you.
And I also have with him Sheni Saliu, the senior manager IFRS. That's he's an IFRS expert, also with Ernst & Young West Africa, and both of them are accountants.
Yes.
Thanks for joining us.
Thank you.
Thank you. Can we quickly read something else? The need for the International Financial Reporting Standards was conceived about 10 years ago with the establishment of the International Accounting Standards Board, and Nigeria has signaled intention to adopt it by 2012. And this, of course, is the year 2012. Countries like China and almost all the European countries have switched to IFRS. In Africa, South Africa, Kenya, Ghana, Sierra Leone, and Zambia, they have adopted and are practicing a harmonized IFRS. Canada, like Nigeria, will join the IFRS by 2012.
And I'm sure our viewers are itching and wondering, especially what does it all entail? Let's even begin with defining what the IFRS is, and I'll start with you.
Thank you. IFRS simply means International Financial Reporting Standards. These are globally accepted accounting standards issued by the International Accounting Standards Board, IASB. You know, you can compare this with our own local standard, referred to as Statement of Accounting Standards, issued by the Nigeria Accounting Standards Board, now FRCN, Financial Reporting Council of Nigeria. And when you are talking of international financial standards, you are only looking at accounting standards that are acceptable worldwide. And like your introduction has it, it has been adopted by several countries. You're talking of all the countries in Europe. You're talking of South Africa. Europe migrated to IFRS 2005, South Africa 2005, and then Ghana here 2009, and Canada 2011, where US is planning to migrate between 2015 and 2016. But as we speak, India is on hold for reasons known to that geography. But the beauty of it is that it's a set of accounting standards acceptable in most of the communities in the world.
Let's talk about why we need to have accounting standards that are acceptable by most of the world. What are the advantages for us? What is in it for us? Okay. My question is to Sheni.
Oh, thank you very much. I think to have why do we need to have accounting standards? I mean, the accounting standards, just to take on from what Dayo said, accounting standards are fundamental principles that guide preparation of accounting standards. And for you to be able to pick a financial statement and say, I understand what these numbers say, means that the basis of preparing the financial statements have got to be clear to everyone. And that's why you have international financial reporting standards that provide the principles, you know, that all preparers of financial statements will use in preparing those financial statements, so that when the financial statements are picked up by all stakeholders, users, investors, regulators, they appreciate what they're looking at. They know the basis. The financial statement can be picked up, downloaded on the internet anywhere in the world, and the users will be able to use the information for decisions.
Does it have a direct impact on our economy?
In Nigeria, yes. Adopting IFRS has direct impact on our economy. They are numerous. I mean, one of the first things is that adopting IFRS in Nigeria, you know, will put Nigerian entities on the on a pedestal that they can have global exposure to foreign investors. You know, they will have global exposures. there'll be more attraction for foreign direct investments. You know, Nigerian entities, because the financial statement that they're going to be presenting will be meaningful to all global stakeholders, it would enhance their ability to raise finance globally outside the Nigerian the capital market. So they will be able to attract finance, and finance tend to be cheaper outside Nigeria. So they will be able to derive those benefits of cheaper sources of finance, which will have significant bottom line benefit for their own investors.
Okay,
And
I want to talk about now where you have just hinted what the benefits would be for the entire economy. I mean, we're not looking exactly at a direct, but then it's an indirect way of even creating jobs, like the minister says. But let me ask Mr. Dayo on the issue of what this holds for the companies. Now, the minister, Nigeria's Minister of Commerce and Industry, Senator Jibril Martin Kuye, has said that this would be mandatory for companies in Nigeria, both the public enterprise and also the private sector, and SMEs as well.
Yes.
At the long run, what would be the benefits for these companies if they do adopt the IFRS?
Yeah, like we said before, it's going to increase access to international markets. It's going to reduce the cost of capital, because by the time these people flow in, the direct investment is going to impact, when you're talking of cost of capital, you are looking at the demand and the supply side. And if you have reasonable supply, it's going to put a sort of downward pressure on the cost. So they're going to enjoy reduced cost of capital. And also, it enhances transparency and comparability. Transparency in the sense that the IFRS statements discloses a lot of information, but most of other standards will not disclose as much information, and it is like indirectly it improves the level of corporate governance, the reporting standards, how you report your transactions. So this will impact on them. And like we said also, you'll be able to compare apple with apple rather than comparing apple with oranges. Because if you're on the same platform, what is obtainable in your company can compare with anywhere in the world. I think this will benefit directly the company. Then when you are looking at the nation, that's the economy as a whole, by the time investors have more confidence in our economy, they will be flowing in their investment. And when they flow in investment, it's going to generate jobs for people. And that will, increase the level of employment. So this is...
Okay. Yeah. Let's talk about the impact on IT.
IT.
Yes.
Okay.
Shane.
I mean, as entities adopt IFRS in Nigeria, one of the key things, as a first-time adopter of IFRS, is to look at the IFRS standards. You try to look at, you benchmark our local standards with international financial reporting standards. You look at the gaps. How do we do things? How does IFRS expect us to do things? And these gaps that you identify will have numerous implications for an entity that wants to report under IFRS. And one of the potentially significant area that adoption of IFRS might affect an entity is on the IT. If adoption of IFRS means that the way you currently recognize your revenue, the way you currently, do your financial reporting would change drastically. It might mean for that entity, the implication might be you might have to replace your system. That's at the extreme, or you might have to embark on significant customization to your existing system. So it's an opportunity for an organization that is seeking to move on to a new system to sort of just look at that as, let's take this transformation with this IFRS conversion.
Okay, I want to ask a question that is quite a challenge. Yes, we're looking at standards and adopting what obtains globally, but the integrity issue, and then that's very strong, because we can have the best of standards, but then the human factor needs to be captured in here. And I'll start with Sheni before I move to you. Now, it's important that we also know that the Barclays scandal, for instance, and some scandal in our country, Nigeria, where accountants, kind of sort of allegedly misled people to quote what it is that their stock is not worth. How do you say this, tackling that in terms of the principle of taking the IFRS for what it is?
I think first I would like to say, without trying to defend the accounting profession, that it is expected that if anything goes wrong, accountants are the first to be pointed at. And that is something that, as a professional accountant, you can't shy away from that. But, you've also alluded to the fact that even with the best principles and accounting guidelines, the human factors will always play a role. And that's why, as we're adopting IFRS standards in Nigeria, we expect that there will be huge benefits from having more transparent financial reports and all that. But that does not eliminate the risk of human factors.
Okay.
So you need a very strong corporate governance, to work in line with very strong financial reporting standards to achieve the overall true and fair financial statements that are risk-proof, not riddled with frauds and stuff.
All right,
like that.
Mr. Dyer.
Yeah, integrity is key here. Integrity is key. Without integrity, all we are saying will come to zero. But the beauty of IFRS is that it incorporates a lot into the reporting. I mean, that the corporate governance can easily, you can form your opinion on the corporate governance of a company by the time you just study the financial statements. That is the beauty of IFRS. We cannot eliminate totally the human factor. And like I said, in fact, the one you are looking at is the high-profile fraud. You are not looking at the minor fraud. Fraud is fraud, but there are some you categorize as organizational fraud and occupational fraud. When you're talking of organizational fraud, you are looking at aggressive accounting that will result into benefits for the organization directly. But when you are looking at occupational fraud, you are looking at the type of fraud that will benefit that entity, that individual. If somebody has fraudulent intention, he will always weigh the benefit and risk of fraud. And if he sees that the risk is high and the return is high, a fraudulent person will go ahead to do it, to take that chance.
Okay.
But integrity is the issue.
Now, a last question on impact on tax was directed on you, but you took it on the IT level. Now let me direct the impact on tax on you, sir. Dio.
Yeah.
The impact on tax.
Yeah, impact on tax. Yeah, I will just mention two. The first one, I will talk technically. It has to do with deferred tax. Okay. And that is when you are converting your balances from local to international standard. There will be some differences that will result into what we call deferred tax. But the imminent one has to do with a loan given to employees. When you give loan to your employee, for instance, at 4%, and the market rate of that loan is 6%, IFRS will fair value your loan. Instead of recognizing it at 4%, it will be recognized at 6%. And the difference of 2% will have to go into your profit and loss account as employees' benefit. The question here is the tax revenue going to tax that employee's benefits as benefits in kind in the hands of the employee? And when the company is being taxed by the Federal Inland Revenue, will the revenue there at the national level accept this type of difference as an allowable tax expense? This we're still awaiting the guidelines from the authorities.
Listen, I want to thank you so much, gentlemen, for coming on the program to discuss how Nigeria plans to adopt the international financial reporting standards, which you say will be beneficial to the country.
Yes.
Thank you very much for coming on the show.
You're welcome.
The rest of the show continues in a bit.
And yes, it continues with a bit of entertainment. It's Friday, and then just to say that Vicky earlier had an interview with One Soul on film production.